Welcome to our investigative look into the world of financial influencers, or Finfluencers. In an era where traditional financial institutions are often viewed with skepticism, millions are turning to social media for investment advice. From TikTok stock tips to Instagram crypto gurus, these digital creators wield immense power over the portfolios of Gen Z and millennial investors. Research indicates that approximately 79% of Gen Z individuals obtain their financial advice directly from social media platforms. But is this democratization of finance a breakthrough or a bubble waiting to burst? Today, we explore the fine line between education and exploitation. The numbers are staggering and show no signs of slowing down. The hashtag FinTalk hashtag alone has amassed over 4 billion views, illustrating a massive appetite for financial content. These creators fill a void left by the education system, offering quick, digestible tips on everything from 401ks to day trading. However, unlike certified financial planners, many of these influencers have no formal background in economics. 1 in 4 young investors uses social media for their primary research, yet 56% admit to following specific investment advice without verifying it through a secondary source. Professional financial advisors are bound by fiduciary duty, meaning they must legally act in your best interest. Finfluencers, however, often operate in a regulatory gray area. Without a license, they can promote volatile assets without disclosing the risks or their own personal stakes. This creates a Wild West environment where bad advice can lead to catastrophic losses for followers who treat viral videos as gospel. We are seeing a growing divide between traditional wealth management and social media speculation. Currently, there is no universal fiduciary requirement for social media financial content creators. If the advice is free, how are these creators making money? The answer often lies in affiliate links, sponsored content, and referral bonuses. Some engage in pump and dump schemes, buying an asset, hyping it to their massive audience to drive the price up, and then selling before the inevitable crash. Transparency is often sacrificed for profit. In some documented cases, a single sponsored post can pay an influencer more than a year's worth of traditional investment returns. This conflict of interest is rarely disclosed in the short duration of a TikTok or Reel. Government bodies like the SEC and FTC are finally catching up to the digital trend. Recently, several high-profile celebrities and influencers were fined millions of dollars for failing to disclose they were paid to promote specific crypto assets. New guidelines now require clear and conspicuous AD disclosures, but enforcement remains a significant challenge in the fast-moving digital space. Regulators are issuing warnings that social media clout does not equal professional competence. They urge the public to verify the credentials and licenses of anyone offering money-making tips or investment strategies. How do you tell a legitimate educator from a potential scammer? Watch for red flags such as guaranteed high returns, intense pressure to act now, or a focus on luxury lifestyles rather than technical analysis. Real financial growth takes time and diversification. If a creator promises you will be a millionaire in 30 days by following their secret method, they are likely selling a dream rather than a sound strategy. Always look for a lack of risk disclosures. If it sounds too good to be true, it almost certainly is. The consequences of following bad Finfluencer advice are not just theoretical, they are devastating. During the 2021 meme stock craze and the subsequent crypto market crash, thousands of retail investors lost their life savings. One survey found that 15% of new investors had to take on additional debt to cover losses incurred from social media-driven trades. These stories highlight the human cost of financial misinformation. Behind every viral success story, there are often hundreds of silent, significant financial losses that are never posted to the influencer's feed. Knowledge is power, but only if it comes from a credible source. To protect yourself, prioritize financial literacy through established educational institutions and cross-reference social media tips with official financial news outlets. Always consult with certified professionals before making major investment moves. Social media can be a useful place to discover new concepts, but it should never be your only source of truth. Your financial health is too important to leave in the hand of an algorithm or an unlicensed creator looking for views.